My name is Andrew Thake. Just like to go and welcome you to our Minds and Money 5 at 5 show, which this week is sponsored by Kintavar Exploration, Standard Lithium, UR Energy, and Rio Silver Inc., and is brought to you in association with the Resource Global Network. For those of you attending 5 at 5 for the first time, the aim of 5 at 5, 5 guests at 5 p.m., is to maintain engagement between investors and miners through a lively interactive format during the current situation. Few admin announcements before we start. To make it as interactive as possible, please have your videos switched on. And to ask a question, please submit them in the chat function, which is at the bottom of your screen. We'll also be having polling questions throughout the 5 at 5 where you can vote. For this week's show, we're joined by a fantastic lineup of guests. They are Kiril Mugerman, President and CEO of Kintavar Exploration, Robert Mintak, CEO of Standard Lithium, Jeff Klenda, President, CEO and Chairman of UR Energy, Christopher Verrico, CEO of Rio Silver Inc., and last but by no means least, Simon Popple, CEO of Brookville Capital. So to go and start the ball rolling, perhaps I can ask my colleague Jackie to get up the polling question. We can get that on the screen now. We'd encourage you all to go and vote. And the question, hopefully, that should be coming up on your screen now. Joe Biden won the US election last week, but who will win the US presidency in 2024? You've got a choice of 5 there, sort of 5 kind of interesting answers. Just while you're all voting, perhaps I can bring in one of our US-based guests, Jeff Klenda, President and CEO and Chairman of UR Energy. What would be the impact of a Biden presidency on US nuclear policy and the demand for uranium?
Well, Andrew, I think that my answer to the polling question would be ideally none of the above. But I think that we, as you can imagine, we are without a doubt the most politicized of all commodities globally. So we've been paying close attention to the Biden camp and everything that comes out of them with respect to all things nuclear. And so far, we have not heard anything negative. They've been very pro-nuclear. They have not only advocated for the maintenance of the 96 reactor fleet that we have here in the United States. They are behind the new technologies, the small modular reactors and the micro reactors and the accident tolerant fuels. But one of the things that we're particularly pleased about is there are 2 pieces of legislation moving through our Congress right now. One of the American Nuclear Infrastructure Act that really covers all things nuclear, and the other one we're calling the Barrasso Bill, which essentially will form the American Uranium Reserve, which would mean that companies like ours would be entering into contractual arrangements directly with the federal government. So far, so good. Everything we're hearing out of the Biden administration has been positive. We hope that it stays that way.
Okay. And Simon, what do you think will be the impact of the new US president? And what do you think his policy and how do you think his policies will affect commodity prices?
Well, I mean, I think the mining community is improving significantly in the ESG space. I wouldn't say across the board, but generally ESG has been improved a lot. And therefore, you know, I think any politician has got fewer reasons for having an issue with the space. I'm hoping that perhaps removing the ESG hurdles will have more institutional interest in the sector. And I think also, you know, there's going to be a lot of money flowing into it, not necessarily because people are pro-commodities, but, you know, if you look at all the money out there and, you know, it's got to find a home somewhere. And a lot of the homes that previously would have gone to are, let's say, less attractive than they used to be. You know, the idea of negative interest rates and things like that, which I think are with us for a long time. So, you know, I think the sector's, you know, is going to do pretty well, to be honest.
So I think it's possible to have the polling answer up, Jackie. I seem to recall there being quite a random selection of voting. Was it Kamala Harris that won the poll? If we can have the polling question up, I think it probably was. I remember seeing a few people had decided to vote for Kanye West, which I think is a very interesting option, but I think is very unlikely to happen. If we are having problems bringing up the polling answer, I say you can take it from me. I think it was Kamala Harris. Oh yeah, Kamala Harris who won that poll with 56%. So well done, Kamala. I think without further ado, we should move on to our first mining update of the show. And the first mining update is going to be from Kiril Mugerman, who is President and CEO of Kintavar Exploration. Kintavar Exploration is a Canadian mining exploration corporation engaged in the acquisition, assessment, exploration and development of gold and base metal mineral properties. Its flagship project is the Mitchi property. Can you please talk to us about Kintavar and what sets us apart from its peers, Kiril?
Thanks, Andrew. So Kintavar is a unique base metals and gold exploration company based in Quebec. Not only that we have discovered the first stratiform copper type mineralization in Quebec, we now have the first mover advantage in this type of geology, which is really giving us a big advantage. And we have been adding projects in what could become an important copper district in Quebec. And don't forget, Quebec has not really been mining copper for a few decades. So this is really exciting. Now, beside that, this year it's the Wabash discovery that really got us excited. And Wabash, as we can see on that map, is just 65 kilometers north of Mitchi. And it's another sedimentary basin, mineralized with the same copper-silver mineralization. So stratiform copper, just like the main global deposits like we know in Poland. And so really what we are doing year after year is adding more and more zones and by more targets. And really the objective of all that is adding more and more volume. So we have a good portfolio of gold projects, and one of the projects is already optioned out to IAMGOLD. So that's very exciting. It's a unique project, extensions of Nelligan. And on top of all that, we own all our infrastructure. So, it's very important to have infrastructure to develop your projects. So we own, I would say, a world-class infrastructure. We own a major outfitter, which provides us a great base of operations. So that was a unique opportunity that we acquired last year. So through that, we own the power line that comes to the project. So if you want to start developing our project, you already have the power connection that we own ourselves. We are only 15 kilometers from the Hydro-Quebec substation, so it's very advantageous. We have a rail spur directly on our property, so that's perfect. And we have a neighbor miner, Imerys, a major industrial minerals conglomerate. And all the hauling roads in the region are quite operational, both for the logging purposes and for Imerys. And on top of all that, we are well funded, so we have over $3 million in the bank, and as a bonus we generate some cash flow from running our outfitter operations, so that's great. So our exploration potential is absolutely amazing at the moment. I would say with go to the next slide, please. So that's the Wabash project, and here we what we discovered this summer. And we are only focusing on the first 2.5 kilometers that we really that we opened up. And we see mineralization over 2.5 kilometers with a width of 200 meters. Interesting copper grades of 1 to 2% in the grabs. So we are still waiting for the first trench channel samples that were just completed. We announced that today. Silver grades up to 60 grams per ton silver. We see some zinc, some manganese mineralization, copper and lead anomalies. And that basin barely has been touched. So we've got over 15 kilometers cumulative of that lithology on surface. So very busy summer ahead of us. And really what we are looking forward right now is to try and drill it this winter. So IP started just this week, and between the IP and the channels, we'll be able to start planning our drill holes. And next slide. And this is the mineralization that we discovered this summer. So really interesting bottom of the basin type clastic sediments that really give us a very good size for what could be a very interesting deposit. That's pretty much that.
Okay, thank you very much for that. Got a question sent in from the audience. Does Kintavar have any operations outside Canada?
No, everything is in Canada. Everything is in Quebec, actually. We don't have anything outside of Quebec.
Do you have any plans to go and expand out of Quebec in the near future?
We always look at opportunities. We've evaluated a few, but we haven't made a move outside of Quebec yet.
Sure. Okay. Perhaps I can bring in Simon Popple. I know we spoke before this call that you use the bridge system for assessing investments. Perhaps you can explain to us a little bit about what Bridge sort of stands for, and I guess how would you assess Kintavar, and do you have a question for Kiril?
Yeah, no, absolutely. Thank you. I mean, Bridge stands for balance sheet, resources, infrastructure, diversification, grade, and exploration potential. I had a brief chat with Kiril beforehand, and to be honest, I think his project shapes up pretty nicely on that metric. Just one question, actually, from looking at it. I mean, I looked at your map, which has got a legend of your infrastructure, which looks great. Just one quick question. In terms of employees, is there a town nearby with a skilled workforce, or would you have a camp, or what's the situation in terms of having a workforce should you go into production?
The nearest town is Mont-Laurier, which is 1 hour south of the project, and that is a big central hub for logging, for the logging industry. So lots of technical people there. And on top of all that, there's a lot of people from that region that go to the Abitibi to work in the gold mines. So they are actually very excited to have a mining development in the region, so they don't have to go all the way up north and instead work in their home region. So yeah, no, the workforce is easily available, and it's very easy for them to access. Again, this outfitter that we own attracts so many people that come to the region, and Hydro-Quebec is active in the region. It's a very active region in terms of development in general.
And in terms of, I mean, obviously Canadian weather can be fairly brutal. What's the kind of the operation life cycle of it? Are you able to operate sort of 12 months a year, or is it 8 months, 10 months? What's the sort of cycle?
So we have a big advantage over the Abitibi. So if you go in northern Quebec and the Abitibi, it's a lot of swampy ground. So you cannot really do a lot of drilling there until everything properly freezes. In our case, we are not in that northern territory. We are at the extremity of southern Quebec. So it's a very nice boreal forest that not that swampy. So I can pretty much go and drill there summer, fall, winter, whenever I want. But the other advantage that we have, our field season is starts a month earlier than in the north and ends a month later than in the north. So I actually have more time to be in the field. And on top of that, for the drilling access, I don't need any helicopter support or anything. I mean, the mining operation beside us by Imerys, they basically have a train that brings and hauls their concentrate from there on a regular basis. So no, it gives us a lot of. I mean, if tomorrow we decide we want to go and drill it in February, I can start planning it, no problems. Very easy to operate all year round there.
Okay, thanks.
Question from Kiril. We see that Mugerman graphite appears to have some issues with the Mananu First Nations. Your thoughts? Yes. What steps have you taken to establish good relations?
So we deal with Manawan, and we deal with another First Nation group, part of the Atikamekw. So we maintain very good relationships with them. They are very they are pro mining. It's just that they want slightly favorable, more favorable conditions. And don't forget, so in Quebec, the only First Nation group that has a partnership, well, not a partnership, an agreement with the Quebec government on how to share mining revenues is the Cree Nation. And so because there is no clear agreement between the Manawan, the Atikamekw, with the Quebec government, so the negotiations are basically, it's the first few stages. They never had any mining development. All they're saying is, and we've all read the articles, and they want better conditions for them, for them. So they want more sharing of their revenues, or more access to better access for their communities. But I don't think they are against. They never stopped anybody from exploring, drilling. They're really pro-development. They just want to make sure that they are not neglected. And the Atikamekw is the poorest First Nation group in Quebec. So I understand their concern.
And maybe Sam, just for one last question. What can shareholders expect near term? What were the key catalysts they can expect to see in the next sort of 6 to 12 months?
So I think the timing for Kintavar is actually great right now. Everybody wants to invest before the drilling results, before the drilling campaign starts, and I think that's exactly where we are. We have a really good discovery from the summer. We are now waiting for those field results plus the geophysics to come in. That will really give us a good idea on what can we expect there from the drilling. So anybody who is coming in right now as an investor is coming just not during the boring part where you don't know what's going to be found in the field. It has been found. Now it's a question of just drill it and find out how big it is. So that's really the exciting portion. I think the investors will enjoy seeing those results coming out over the coming months, and then the next summer will be a huge summer for us, because based on everything that we found now, we think it's going to be a really wide campaign throughout the entire project. We started right away with a big blanket approach on soil sampling. Lots of anomalies are coming out, so many places for us to visit this summer.
Thank you very, very much for that. So let's move on to our second mining update, which is from Standard Lithium. Standard Lithium is building the next US lithium project. Robert Mintak is their CEO. Question I meant to ask you earlier, Robert. What would be the impact of a Biden presidency on lithium demand?
I think it's more an emotional reaction by the market and the broader community from the EV space. There won't be any immediate increase in demand because of the Biden administration. The investments that were being made and the decisions being made over the last 4 years from the Trump administration weren't a challenge for the EV industry. I've been in this lithium space for the better part of the last decade, and there's been a lot of overhype and hyperbole on the adoption of EVs. They're starting to get traction now, and that's been under the Trump administration. Investments have been made, decisions have been made, budgets are put in place. That capital would have been deployed regardless of who won the election. I work in the Deep South, so I'm in Vancouver, that's where we're headquartered. Behind me, you can see our project in Arkansas, oil and gas country. We're embraced in South Arkansas as part of the transition in the acceptance of how energy is handled. So Senator Tom Cotton, who's one of the more red Republican senators, he's a great supporter of our project. He says great things about electric cars. So I think regardless of how the election would have turned out, it still hasn't been completely decided yet, but regardless, the trajectory and the momentum is there. So, but the emotional attachment to embracing the Paris Climate Accord and investments in infrastructure, that capital will hopefully be deployed, which will propel it potentially faster. But I think the decisions have already been made by the automakers, and as EV options and energy storage and renewables continue their growth, that it's an unstoppable momentum that we're seeing now.
Mm-hmm. Okay. And then I guess sort of like moving forward from that, I know that our listeners would be very interested to get a bit of an update for Standard Lithium. Would you like to give us a bit of an update on your project?
Sure. You can see behind me in my virtual screen there, that's our project in Arkansas. We're included in mining stories, but we consider ourselves more a technology and project development company. We do data mining, is when I say when people, what kind of mining do you do? We're working in Arkansas. So we're a brine processing technology company, so lithium extracted from brine. The Gulf Coast of the United States sits on one of the world's largest brine deposits. It's called the Smackover Formation. It extends from central Texas all the way to Florida. South Arkansas has had a brine processing industry for going on 60 years now, where they extract bromine from brine. So back in the 1920s, when oil and gas was discovered, the deeper they drilled, they hit water, they hit brine. And in the 1950s, the oil and gas industry said, we figure out something to do with this brine. They determined they could extract bromine from it. So massive infrastructure, almost 10 billion gallons of brine are processed every year in South Arkansas. strip the bromine out and pump the brine back into the ground. The brine's rich in lithium. It's been well understood, well characterized since the 1970s that there's lithium in the brine. It's unconventional in that you can't use a process that the industry uses for solar evaporation because obviously it rains and it's hilly and it's private property and the regulatory rules require you to put the brine back into the aquifer. So it's been overlooked, which is great for us. But it was no massive discovery that the opportunity was immense there. Direct extraction, so pulling lithium ions from brine selectively and then putting the brine back into the ground is the way this will work. That isn't a revolutionary concept. In 1978, Dow Chemical patented the first direct extraction process for lithium from brine based on Arkansas brine. You can look it up. The 1978, the patent was filed, Smackover brine was used. That process is used today by Livent, formerly FMC in Argentina. So the region is the birthplace of direct extraction. Albemarle, the world's biggest lithium producer, got started in South Arkansas as a bromine producer. They ran a pilot plant in 2011, said they successfully produced lithium there. So when we went in, we knew all this. So that's why I said data mining. There's been thousands of wells drilled. What we had the benefit is 40 years of work that's been done by universities and others since the 1970s on direct extraction. And we built a bespoke process to take the lithium out of the brine and partnered with the largest brine processor in North America, German chemical giant Lanxess, who operate 3 brine processing facilities. 5.5 billion gallons of brine they process every year. We entered into an agreement with them that allowed us to put all the money we raised outside of the G&A of the company into process technology. So we put a resource report together of just under 4 million tons of lithium carbonate in the ground, lithium carbonate equivalent in the ground, without having to spend a single dime on drilling, because we could take our samples from the production wells that some of them have been running for 15 years, 24 hours a day. So incredibly bulletproof, robust technical report. And then we could take tens of thousands of liters of brine from the process facilities to our research facility and work backwards to develop the most scalable economic process to extract lithium, gone from a pilot or bench scale to pilot to now the plant you see behind me there in 3 short years. And just it's important to note, in North America, there's actually no commercial lithium extraction underway today since Albemarle paused the production at their small mine at Silver Peak, Nevada. So the only extraction, although it's not commercial at the moment, is our demonstration plant in South Arkansas that's running 24 hours a day, 7 days a week. We got it up and running despite COVID because we're partnered with Lanxess. We were able to piggyback off of their health and safety. And as the plant was being installed, it is large. It's 100 feet by 100 feet, 3 stories tall, fully automated. We were able to, as you commission a demonstration plant like this, things break and things fail, and you made mistakes on speccing things and all of that. We were able to raid Lanxess's storeroom, despite COVID supply chains being challenging, to get the plant up and running. A couple months late, but it's been running 24 hours a day, pretty much consistently since late May, early June, giving us the data which will come to a proof of concept on the technology. We're hoping potentially by the end of the year. Labs are behind in getting results back to us, but Q1, proof of concept, consummate our formal joint venture with Lanxess, and then a final investment decision to go into commercial production, hopefully late Q1, early Q2 of next year. No permits required because we're working inside the fence of the operations there, only amendments. To Simon's question about workforce and access to infrastructure, the area has been in production for oil and gas for 100 years, 50 plus years of bromine extraction. The chemical reagents we use are made in the same zip code, unlike any other project on the planet. We're not at a Salar at 10,000 feet and you're trucking or shipping stuff across the planet. You can literally drive 20 minutes from the project to your reagent supplier. Training for the operations. I just had a call before the panel today with the local South Arkansas University. They have a whole brine processing and chemical processing training program there. So they train people for this all in place. So it's a low to mid-grade deposit. What makes it economic is we're in the Gulf Coast. The key costs on this are chemical reagents. And if you're trying to make battery quality lithium chemicals, you got no better place on the planet, well, at least in the Western hemisphere, than the Gulf Coast for trained workforce. So we're at the final milestones to get, I would say, to the starting line, which is commercial build. And it can be built responsibly because it's already flowing brine. You build it in stages. You don't have to go in with a $500 million to $1 billion initial investment. We're planning 21,000 tons of production without having to drill a single well. That's just from the existing brine flow. And then we're modeling to 70,000 tons by going to areas where the brine actually, the grade improves. We're starting at the lowest grade because it's bromine optimized, but there's areas where the lithium grades are higher. So it's economic with the grade we are at with the bromine optimized. It only gets better as we decouple from the bromine business. So
Okay.
Exciting right now.
Fantastic. I'd just like to squeeze in a couple of questions from the audience. Questions sent in from the audience. What is your cost of producing lithium carbonate through your process? And how many tons a year are you planning to produce?
Yeah, so the PEA we put out in the summer of 2019 had an all-in cost of $4,300 a ton US to battery quality lithium carbonate. So the industry has a challenge to get to battery quality right now. About half of the production coming out of the brine projects in Chile is battery quality. It has to be cleaned up for the rest of it in Asia or where the final polishing is done. Cobre in Argentina has struggled to get any battery quality out. That is the key on this project. So those projects, the Chilean ones were built decades ago, had some upgrading. The Cobre project was built about 8 years ago. So we're going to benefit from a new installation. And then again, we're not the ones who are going to be operating these plants. So when you have a development company saying that, oh yeah, we can develop the resource, we got a great process. And by the way, yeah, we're going to hire hundreds of process engineers and we're going to run all of this and we're going to make this material day in, day out for the highest technology companies to make their batteries. Lanxess is going to do that. So Lanxess operates 60 chemical plants around the world. We got a smart team of rock star scientists. So they made we get it to commercial development. Lanxess takes over, builds the plants and does all the distribution. So $4,300 a ton to battery quality lithium carbonate, 21,000 tons is the target over 3 stages of development from the tail brine. And now we're looking at expanding it to, and this is a forward-looking statement, we're targeting, we haven't put out a PEA on this yet, or a study on it, but 70,000 tons based on pumping more brine because the resource they're only pumping enough to meet the bromine contracts now.
Okay, and just very, very briefly, squeezing one last quick question. Does Lanxess have capital requirements for the project?
Yeah, that's another thing that we looked at the landscape when we built the company and all the spectacular failures and failures to launch. What we've done is we put all the capital into the process technology to de-risk it, brought that to Lanxess. We've been responsible for all costs to date. Once we formulate the joint venture and they take on the heavy lifting, and this has publicly been announced, they're prepared to finance the initial commercial development. So we don't have to go to the market to dilute our shareholders to cover our portion of that. And they're prepared to take initially 100% of the offtake as well.
Okay, fantastic. Well, thank you very much for that. You'll also see a few questions in the chat box we didn't get time to go and ask you, but feel free to sort of answer them sort of like privately in the chat box, Robert. I think without further ado, we'll go on to our next mining update. And it's staying with the US. Jeff Klenda, who we heard from briefly before, is President, CEO, and Chairman of UR Energy. UR Energy is a uranium mining company operating the Lost Creek in situ recovery uranium facility in south central Wyoming. Over to you, Jeff.
Great. Thank you, Andrew. Appreciate the opportunity to tell our story as always. One of the things that I would emphasize, what you're looking at on the screen right now is the interior of our plant. And this is the state-of-the-art ISR facility anywhere in the world, the most recently built. And I like to think the most technologically advanced. And what we sell is yellow cake in the drum, which you see on the right-hand side. And when we get roughly about $50 a pound, those go out the door at $43,000, $44,000 per barrel. And that's our business model. Next slide, please. This is just a brief disclaimer. I will make a couple of forward-looking statements. Okay, haven't we passed over that? Good. and I'll try and identify them as such when I do. But one of the things I'd like to emphasize is that we're not a new company. I started this company almost 17 years ago. We were 7 years in permitting and licensing, but we have been now in production for 7 consistent years. We've produced nearly 3 million pounds of uranium, and right now we've backed off our production to a level that's consistent with the lower prices that are still persisting in our industry on spot price. But one of the things that we're very proud of is that we have emerged during that 7 years as the lowest cost producer outside of the country of Kazakhstan, which is the lowest cost producer in the world. We produce in Wyoming, as you mentioned. This is one of the places, this is the preeminent jurisdiction for producing uranium anywhere in the United States. So we are in the middle of uranium country. One of the things that has really differentiated our company from others in our industry is the fact that back in 2010, 11, and 12, and even as Fukushima was taking place and right after Fukushima, we were putting long-term contracts in place. And these contracts have really given us an advantage over our peers in the industry. Not only have we been able to realize consistent cash flow coming in, which has been a stabilizer for our story and for our shareholders, but we've been cash flow positive, for example, for the last 4 years. But the other thing is that with that consistent revenue coming into the company, we've been able to dilute ourselves less than anyone else in the industry. Sadly, because most of the industry was not contracted, they've been in a position where they've had to live from equity raise to equity raise. We have not had to do that, so we've experienced minimal dilution over the course of the last 7 years since we've been in production. But moving forward as a company, we think that there are a lot of very good things happening. I made a couple of those comments with respect to the Biden administration incoming. So we feel that legislatively there are good things happening. But we found ourselves in a position a few years back, and this really came to a head in 2018, where we have now in the United States, despite the fact that we are the largest producer of nuclear power in the world, we consume approximately 50 million pounds a year. We are now virtually 100% dependent on foreign sources for uranium, for our nuclear fuel, most of that coming from Russia and Kazakhstan. So this is something that absolutely cannot continue. So the United States Nuclear Fuel Working Group was formed. This is something that has really attempted to preserve the fuel cycle in the United States, and something that's quite necessary. Consequently, we have maintained our operational staff there at Lost Creek, and we stand ready to ramp up production at any time. Next slide, please. What I get asked by most investors, and I'm skipping over a lot of things here, but I'll try and touch on some of them. Lost Creek is incredibly scalable, and so we have about 20-year mine life on it right now, but we believe, this is a forward-looking statement, we believe we can double that. But if you take a look at the supply-demand fundamentals of our industry, I think it's important to understand that we are a growth industry. There are currently 54 reactors under construction globally, more than half of which are going to come online in the next 2 years. The World Nuclear Association, in its biennial report, basically models growing demand for uranium over all of its modeling in its base case, its lower case, and its upper case. But during the, of course, over the last couple of years, we have seen greater emphasis on what is the new technologies, and these are the small modular reactors and the micro reactors, which are going to be very important to not just our military, but all of our allies' militaries around the globe. But one of the things that, of course, has been probably the greatest factor that we've all been living with has been the pandemic, the COVID-19. This has resulted in a great deal of supply destruction globally around the world. I think it's important to emphasize that this year in 2020, we are anticipating that global demand will be approximately 185 million pounds worldwide. But what we are anticipating, Trade Tech, UX Consulting, and World Nuclear Association are anticipating, is that our primary production will only be approximately 120 million pounds. So we are seeing a structural deficit of approximately 65 million pounds this year. And in a marketplace that consumes 185 million pounds, that's a substantial amount. So far this year, at one point, we lost 46 million pounds from January through to April. Now we've gotten some of that back on, but this has created market forces that we believe we will continue to see shutdowns and restarts, that this is something, unfortunately, the pandemic appears that it's going to be with us for a while. And so we have seen many of those shutdowns, and we are not going to be surprised to see them continue. Cameco has been a consistent buyer in the marketplace, as has Kazatomprom. These are two of the largest producers in the world. The Nuclear Fuel Working Group, though, has called for a 10-year appropriations in our federal budget for $150 million per year. We expect to be able to get that. It's important to understand there are only 2 companies left producing in the United States. This down from 30 to 40 companies probably 25, 30 years ago. So there are only 2 of us remaining. So we would expect to figure prominently in that budgeting process. And now with the Russian suspension agreement having been concluded, we will see less and fewer imports coming in from Russia, and this will also create greater demand in the United States for the global producers. And as always, there are geopolitical risks that with the bulk of our material coming in from Russia and Kazakhstan, we now find ourselves in a position where we are heavily dependent on Vladimir Putin for our resources. Next slide, please. I think that what I would like to emphasize as I close out my prepared remarks is that we as a company not only have been cash flowing quite well, we had a great year in 2019, did over 32 million in gross revenues, more than 12 million in gross profits. We have about $6 million in the bank right now, but very importantly, we will make yet another delivery of product to our converter before the end of the year, which will give us approximately 300,000 pounds of inventory, which can be sold into the market at any time, which is a current value, gives us another current value of an inventory of approximately $9 million. So we have runway that takes us into mid-year 2022. And so we are not pressed to go out and dilute our shareholders. But one of the things that I would emphasize, and I think this is something that is not asked enough when it comes to the uranium story and those that would potentially be able to provide product to the United States for the uranium reserve, for example, and that is, how much will it cost you to ramp up? In our case, we can ramp up Lost Creek to approximately $1 million and a quarter a year for roughly $15 million. And our second project, Shirley Basin, for about another 24. So for $40 million, I can ramp to 2 million pounds per year. We've kept our core staff on, so we've got that, and we've retained that critical group of people to give us the ability to ramp back up. We think that we can ramp to a 1 million pound run rate in as little as 6 to 9 months, but we've also demonstrated the scalability of the Lost Creek facility. Again, we have about 20 years of mine life there at the present time. We believe that that can be doubled, forward-looking statement. But most importantly, and what I would like to leave people with today as a concluding comment, would be that we are in a position where we can ramp up more quickly, at lower cost, and at less dilution to our shareholders than anyone else in our industry. We're very proud of that, and it puts us in a very unique position in terms of relation to our peers. So we feel as though we are absolutely in the strongest position in the space, particularly in North America. There's no one that can produce at a lower cost than we can, and that includes Cameco. That concludes my prepared remarks. Thank you.
Okay, we've just got time to take really one sort of brief sort of question. Just handing over to Simon Popple. What are your thoughts about, I guess, sort of a question for you, Simon, and then what are your thoughts about uranium? Are you a uranium bull? And do you have a question for Jeff?
No, absolutely. Well, first of all, yes, I am a uranium bull. Question for Jeff, really. I saw your gross profits were about 12.2 million, and I think that was off 100,000 pounds of uranium. Now, if you ramp up, just using simple math, should we be thinking of sort of 50 million gross profit of 1 million pounds of uranium, or is a potential for you to ramp up beyond that?
Yeah, there is.
Yeah,
there most certainly is. Look, we and the 50 million. If we were to reach 50 million gross profit, that would likely be on 2 million pounds of production, not 1 million. So that would likely require that we would bring on our Shirley Basin project as well. But as I mentioned, we can ramp to roughly £1 million per year, £1.25 million per year run rate in approximately 6 to 9 months. In a year and a half, I can be at that £2 million per year run rate. So maintaining the operational staff has been costly to the company, but it's something that we consider to be critical. We want to be able to respond when we're called upon to produce. And I think that the United States has put itself in a position where we are rapidly consuming the above ground inventories. I don't think that the United States, I think it's incredibly dangerous from a national security standpoint to rely on geostrategic rivals like Vladimir Putin for our supply. I don't think that it can continue on much longer. Above ground inventories are being consumed at an incredibly rapid rate. So we think that that 2 million pounds is going to be called for in the next couple of years. We're ready to ramp up, and that should give us approximately that number that you're throwing out there, roughly about 50 million gross profit.
So just one quick question off the back of that, Andrew, if I could.
Sure.
One thing that was very impressive about your other slides was, being such a low cost producer. If you were to ramp up to the sort of 2 million pounds of uranium, would you still remain a low cost producer, or bringing that other project on stream, would that increase your costs?
It would not, only from the standpoint of capital cost recovery. Aside from that, we actually believe that Shirley Basin will be a lower cost producer than Lost Creek. And the reason being is that it's a former producer and it's 4 times the grade. We actually have never had the opportunity to ramp up fully. In 2015, we had our largest production year of approximately 750 million pounds that year. Our C1 cash cost came in at $16.27 per pound, with all-in sustaining costs coming in at right at $25 a pound. If we were to be able to ramp up to 1 million, 1.25 million at Lost Creek, plus bring in another, say, 750 million pounds per year from Shirley Basin, we believe, and this again would be a forward-looking statement, but we believe that our C1 cash costs would come down in the $12 range. And we believe that what we would see in terms of all-in sustaining costs is that we would get well below 25 and get down into the $22 to $23 per pound all-in costs. And again, that makes us one of the lowest cost producers in the world.
Thank you very much for that, and thank you very much, Jeff. You'll actually see, Jeff, you've got a few questions in the chat box. Again, we didn't have time to go and ask you them all, so perhaps you'd like to just sort of take them offline and answer them on the chat box. That would be absolutely fantastic.
Will do, thank you.
So just before our final mining update, let's have our second poll up. And question is quite a straightforward one. In 2021, which would be the best performing precious metal? And you've got a choice of gold, silver, one of the PGMs, or diamonds. And whilst you're voting, Simon Popple, what would your vote be?
I'm a great fan of silver, to be honest. I think both gold and silver could do very, very well, but in particular silver. Gold is already at sort of previous highs, and I think silver is, it's got a long way to go, and yeah, I'm a huge fan of silver. And
then bringing in Kiril, what would your answer be?
I agree with Simon. I'm actually a big believer here in silver. I think gold is going to perform very well, but silver has a great potential ahead of it for the coming 12 months.
Yeah, it's certainly very interesting. I mean, I see that we can close our polling now. I mean, most of you have voted for gold, but certainly from Mines and Money perspective, where we've seen the greatest increase in mining companies at our events in 2020, it's definitely been within silver companies. And I guess kind of with that, I guess we can kind of like, so you're going to bring in our sort of our final guest, who's Chris Verrico from Rio Silver. Chris, I assume you would have voted for silver, but can you talk to us a little bit about where you see the price of silver heading, and why investors who are listening into this program should be investing into Rio Silver?
Great. Well, I'm not a very good soothsayer when it comes to the price of silver. Thanks, Andrew, and everybody. But silver being more of a byproduct and gold being more of an essentially a fundamental key product. it depends on how the demand weighs out for silver, in my mind. But both are looking very well. Actually, I think they're both, gold is money, and we're all watching what's going on in the world. And I guess that's why we're all sort of partly gold bugs to some degree. And so this will bring me back to Rio Silver, which has been in existence about 12 years in Peru, solely pretty much in Peru. We have one project in Northern Ontario, which is very exciting, but it's a bit of a difficult tenure situation. So we're focused solely in Peru. And we have several projects in Peru. This is the slide you see in front of you is Niñobamba. Niñobamba came into existence probably 20 years ago with Anglo Gold when they made a pass through Peru prior to going into Colombia. And they generated this target. They drilled 3 fast holes with Richard Silito in tow. And then quickly the project was handed off to Bear Creek Mining. That was the Niñobamba project, which you see in the upper part of the screen. And the lower part of the screen was Joramina. And Joramina was worked on by Newmont during the same time period. And they came up to ultimately in 2012, they drilled 31 holes, I believe. They'd spent a tremendous amount of time doing metallurgical studies. They had their partner on the project at the time was Southern Peru Copper. And so they had to prove that the project was that they were earning in to prove it wasn't in fact a base metals project, but in fact it was a precious metals project. They spent a bunch of time and money doing that. They were just getting geared up to go after the focus on the silver more than the base metals, the associated a bit of copper that's with it, and zinc. And they worked on a leachable target. So this project is back in 2012. Rio Silver only owned Niñobamba, and they spent, and in 2012, Rio Silver spent about $1 million Canadian doing an entrenching program, trying to work on the results, the past results that had been generated by Anglo Gold and then Bear Creek. For some reason, Bear Creek had only ever assayed for silver, and our geologist found a whole buggy silica zone rich in silver. So we'll get to that in a minute. But anyways, the project is it's in Ayacucho. It's in the prolific belt of big producers. It's big. It has a large footprint, which is in this business you have to be big or go home. I think some of our peers would pay tens of millions of dollars, or if not hundreds, a lot of money for a project like this. We own it outright. It's been consolidated. It's been a struggle to maintain the tenure over the years, so the company has been sort of suffered through some tough times. But we own it outright, and to the left of the screen you'll see a valley there. There's actually a power line and the major access into Ayacucho. It's a straight run down to the coast. Not that we're potentially shipping a base metals project, but it has fantastic access for Peru. It's straight down the coast to the Pan American Highway. It's about a 3-hour drive. Looks like a normal North American road and major highway, and onto the Pan American up to Lima or wherever you need to be for infrastructure. It's got regional power nearby. Obviously, there's water. There's an aquifer that runs across the property, which is a bit of a concern. We have to work with the locals on that, but not an impediment, major impediment. And we're slowly, we were just working on the social license as we speak. We've worked there before. We've had operating permits in there 10 years ago. We've got the same team reassembled at this point in time. We've got a team of geoscientists. They're going to do all the baseline work, all the flora and fauna, and all the baseline studies that have to be prior for our submittals. That piece of work will be done by Christmas. This is talking about for Niñobamba. And we're working on the community agreement. We've got people in place that are actually doing that work for us as we speak. And they've actually, in Peru now, is a very pro-mining. Peru is a super pro-mining district. And they've actually streamlined some of our commitments as long as we continue on with them in order to get our drill permit. So we're working on a drill permit for Niñobamba come mid-April to May sometime next year. And that's generally our working season in Peru. You have a rainy season up in the mountains, which kind of coincides with our winter. So their work season is kind of very similar to ours in Canada. Time-wise, April through to November is the best time to operate. And so we're pretty much not guaranteed, but 99% sure we'll have a drill permit in place by May and ready to go. We have seen no impediments to see why that shouldn't be the case. Everyone's very, very friendly. The locals have been very friendly towards us. And we, of course, have a very good attitude towards the local people in order to earn our social license. As others know, working in South America, you've got you've got to go in and solve problems for them, not make problems. So that's our key focus going forward. Maybe we can just go to the next slide. This is the Joramina zone. This is where Niñobamba, this is where Newmont had worked under Southern Peru Copper's property at the time, but Newmont spent actually $7 million US prior to 2000 to 2010 on the project. And what they actually came together, they came together with a leapfrog model that is basically 470,000 ounces of gold at a 5.7 gram head grade and 6 million ounces of silver. So they submitted this report. It was all part of a. It's just that's not a defined resource. All disclaimers aside, that was a leapfrog. It was they only actually modeled 12 of the I think the 30 drill holes that have been drilled in the central portion. They put limits on the parameters of the leapfrog model, but it's certainly a very solid guide for them going forward to put this thing into a resource level. That's the job we have at hand. Their comments at the time were this would make a very profitable mid-sized mine, and if not, it's also still the lottery ticket for the big one. It's got all the signatures of being something much bigger. So Newmont, everything went sort of quiet in 2012. And as time we'd done our work at Niñobamba, but the company was sort of struggling along, with difficult junior market circumstances. And somebody at Newmont made a mistake and they dropped the key property. So we managed to grab it, and we claimed it. And then we went back to Newmont and negotiated with them for the infill properties. And we then had an NSR, a 2% NSR with Newmont at the time, and they handed us all the data. But since then, we've managed to rotate out of that commitment. We've managed to rotate the holding of the property by systematically dropping and restaking when it was quiet. Nobody was paying attention. And we've managed to amass the property entirely now. It's royalty free. So maybe we'll go on to the next slide. This is the Niñobamba zone, a predominantly silver zone. We've just also done a leapfrog model, taking into account there was, I believe, 12 or 13 drill holes, 16 trenches are cut and rock, and actually the outcome of the leapfrog model. It showed a potential for 30 million ounces of silver, 31 million ounces of silver, down to at a 2.75 ounce head grade, down to 30 meters depth. So they just barely. It was a very conservative model, but we were hoping, with a little bit of drilling and infill, we believe we can, I'll obviously expand on that. We think it's a world-class target. All the trenches that you can see in the slide there are sort of headed down slope. We had across the top of the brow of the hill, we had over a gram of gold and almost 100 grams of silver averaged in the trenches there for 56 meters across the brow of the hill. All the trenches that went down slope were all channeled and rock channel sampled, properly sampled, and they all ended up in sort of plus gram type gold material in those trenches. So and then we discovered a major buggy silica zone down slope. So that's the rock unit that we're gonna attack and drill. We're permitting for May. We're quite confident that's going to turn out to be something. We think we'll get a small resource there initially, and then potentially our plans are we'll then slowly work out in the resource and drill out and stay in ore. That's our plan going forward. But of course, we need to bear out the work that has to be done come this May.
Okay.
So that's basically it. There's about $1 billion worth of identified silver just down to 30 meters in today's markets, and we've got about $1 billion worth of gold essentially at Joramina, the other end of an 8-kilometer strike, 6.5 kilometers in between these two deposits. And there's also anomalous and some ore grade hits that have been very small resource was delineated at Randy Pata, which was in between the two. So the company owns this target outright, 100% at this moment, and 63 million shares out. We've got management has about 35% of that. Close associates and friends of ours are another 35%, and retail is about 30%. So we're trading on the TSX Venture, and so I didn't put a slide up, you guys, just to make things simple. But with the other focus in Peru is we have a project called Palta Dorada. Palta Dorada is in northern Peru, not too far from Lima. It's about a 6-hour drive, or 6.5-hour drive north of Lima. It's very close to the coast, which is unusual. It has no community, formal community to deal with. It's a high-grade mesothermal gold vein system. Well, we've traced it over 1 kilometer. You know, the hand sampled bulk samples work that's been done prior by the previous owners prior to us. When we were involved, we were on site when they were doing it. I was reconciled with our geologist did the sampling. They averaged 10.5 grams of gold and 10.5 ounces of silver, 1.7% copper, and the structure sort of averages 0.6 of a meter wide, 600 centimeters wide, but it pinches and swells. But it's a very high-grade mesothermal vein set. It's something that's very pushed up in the coastal volcanic or in the coastal granites. So it's got a very competent rock, so it's very low cost of development. These mesothermal vein systems, orogenic gold, these systems head right to sea level. We're at 800 meters at this project, which is very unusual. And so the project, we knew about it for a time being, but the project came up about a year ago. And the guy initially wanted millions of dollars, and he wanted a lot of stuff for this thing. But he came back and he was doing some other little heap leach work nearby, and he wanted cash. And we come up to a deal. We gave him $250,000 on the barrelhead. It was on cash on the barrelhead deal. We raised the money quickly last summer, and we managed to acquire it. Okay. Our partners.
I think for the interest of time, I need to interject because I'm quite keen to get some questions in from the audience.
Sure.
There's a couple of questions in from the audience. I think, first of all, does the presence of iron increase the cost of extraction and processing of the silver and gold mineralization?
Well, it's not actually. There's no iron in either the head grade or the formula, the formulations of what we're working with right now. We float off the lead. So our partners have we have an earn-in. We own the Pelta Dorada project outright. Our earn-in partners who are coming into the project have a toll mill. It's just 200 kilometers, but it's just a flat haul down the Pan American, down the coast. A toll milling facility, so we have access completely to their facilities up and running. They're quite busy right now. It's Peruvian metals, so they're going to earn the next 50% by spending $250,000 US on the project over the next year. They got to finish up, and we're sort of along. We've started that piece of work. And then we'll be equal partners going forward. But they're going to be doing bulk sampling campaigns as we go forward, and we share the revenue on that. So we're hoping to generate a little bit of cash flow, enough to cover our sort of immediate overheads going forward. And this thing could become a very big, a very sole-focused type of venture too. It's the geology and the settings as good as many projects are being forwarded at much higher market caps today. So it's a little bit early in its days, but that's our sort of commercial ventures cash flow model. And our Niñobamba, of course, our big home run, big heap leach potential, world-class project. So we own all that stuff outright, and we're trading at a $5 million market cap. So there you are, guys.
And then bringing in Simon from Brookville Capital. What silver stocks do you own, and what are your thoughts on Rio Silver? And do you have a question for Chris?
Yeah, no, sure. Look, I must say, I tend to focus on Australian and Canadian silver stocks. I probably watch too much Netflix, which has sort of made me nervous about South America, but there's clearly some fantastic opportunities down there. I think the question I've got for Chris, actually, the main one really is what price of silver have you assumed for your, I think there was a resource calculation in there somewhere, perhaps done by Newmont, but what was the price of silver that was assumed?
I know that silver was it was about $20 at the time when they produced that report. It was on the last run there. So it was based on some pretty optimistic markets at the time. Well, I think they were looking at the market at the time. I don't know that for sure about Simon, to be honest with you, but they were base cases.
Sure. Obviously the price is north of 20 now anyway, but it's just useful to know what assumptions have been used in resource calculations.
Yeah, those were desktop type studies, but they believed that they had a very profitable thing, and Newmont was buying into forwarding it. Just the music went out in 2012, but all those guys stopped spending money. They all did. I mean, so that's essentially what happened. So, and we've been in Peru. We're all the principals of the company are married to Peruvians just by coincidence. We've been in Peru for a very long time. We have only one. Our CFO Ryan Grywall, very distinguished, a very accomplished geologist, is about the only non-Peruvian that's sort of wandering around down there. It's all run by Peruvians. We share offices with Peruvian metals, so we share overheads and things, and it's been working out very well for us, super well. And I don't need to be there personally. We're well covered in country at the moment to fulfill our mandate. Yeah.
Okay, and then just I guess a last question for my from myself, Chris. What are your key goals for 2021 for Rio Silver? What's going to make it stand out from the rest of the other silver mining companies out there?
Well, we're gonna drill some killer holes in that buggy silica at Niñobamba, all disclaimers aside, and we're gonna put a small resource on the table, but it's gonna be, obviously wide open, we believe, and that's that'll drive the valuation of the company. That'll be the real value driver. And
okay, well, thank you very much for that, Chris. Thank you very much to Simon Popple. Thank you very much to our sponsors for this week, Rio Silver, Your Energy, Kintavar Exploration and Standard Lithium, and also thank you to our partner Resource Global Network. See you next time. Until then, stay safe. Thank you very much. Bye-bye.
Thank you.
Thank you.